Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York on Tuesday, the 15th day of July, 2014, and this is the daily report for gold and silver. The mayhem continues, the downside continues on the precious metals markets with moderately to strongly lower pricing across the board today. First to gold, current print 1293.62. Just off of a low of 1291.60, high 1314.80, down about a full percent, or as I said, $13 on the day. Silver also continues its plunge, also off about a percent on the day, down about 19 cents. Current print on the screen is 2064. Right off of the low, 2061, high 2119. More on silver and where we think it's going to head to at the end of the show. So traders, let's make some sense out of this recent market activity and dramatic sell-off in gold and silver. First, do we think that any kind of bull run is over? And secondly, does it go on to any logical place, and what can we expect to see in the future? Well, to really put this into perspective, I want to take a look at it in two ways. The first way is a short-term look here. We're looking at a 360-minute chart. And then I want to look at our daily chart because realize, traders, we're coming off of this double bottom right around 1180. Market moves from there up to 1391, comes back down, and this bottom here at 1240 is above that bottom. That's what we'll show on the daily chart. So we are forming, I believe, some sort of a base. And when we consider what we're looking at here, when we look at the fact that the market's moved from 1240 up to 1340, we've had roughly a $100 move in the market. We talked about the fact yesterday that 1304 was a 38% retracement. That's kind of where it stalled at yesterday. We also talked about the fact that there was some potential support when we look at these bottoms in here, but that wasn't to be. Even though we had resistance here, support here, this proved to be no area of contention for traders to bring the market down. Now, we're currently sitting at 1293, right off of a 50% retracement. And then the other retracement that we have, which is where I believe that the market could inevitably fall to, is about 1280. That's a 61% retracement. However, prior to that, what I'm looking at, and this of course is just a very, very crude count. Hold on, let me change the color of my arrow. So what we're really looking at when we consider is we could have had something like this: wave 1, wave 2, wave 3, wave 4, and then a fifth wave up. If that's the case, then, and realize this is a very, very micro count, we're using very, very short-term charts here, we could see something like a B coming up about 50%, and then a final C taking us to 1280. That's one possible scenario. And my sense is right now, we want to see how this market reacts at this point. We're almost done with trading for the day. Looks like we're going to settle in about a 50% retracement, and 50% of this recent move wouldn't be bad if the market started to go up. My sense is that we'll probably see some kind of a bounce or a B wave here, and then we'll culminate with some sort of a final C wave down. From there, we'll probably see the market then go back to its upward move that we have been witnessing. So traders, as I spoke about, I want to take a look at the recent activity and really put it into perspective, both short-term and intermediate term. Really what we have been looking at has just been this particular rally here, this $100 rally, 50% of it comes back. But when we take a look at the bigger picture, and this is what I was speaking about before, the bigger picture is the fact that really at the end of last year, we hit that bottom coming into the beginning of this year, and this is that double bottom at 1180. From there, we see the market climb pretty dramatically as it moves up to almost 1400. So in terms of our count itself, I've talked about a micro count within here, and then an intermediate count would be more wave 1, wave 2 came almost to 76% right in here, and this is wave 3. Now, of course, wave 3 is going to be composed of a sub-count. Within that sub-count, as I said, 1, 2, 3, 4, 5, maybe some sort of an ABC, will give us the wave 1 and wave 2 of this subcount, or a larger wave 3. And that's what I mean putting it into perspective. What I'm trying to say and what I'm trying to point out is we absolutely formed some sort of a bottom here. It was a double bottom at 1180. Traders and analysts that are calling for the market to go back to this area, well, they could be right. But my sense is we have not seen any technical confirmation of that, because in fact, when we consider this most recent low, it was well above this prior low of 1180. So we could absolutely be seeing a scenario in which we had our double bottom here, market comes to our top here, we get a corrective wave here, and now we're moving into a area in which we're back into an impulse phase. And of course, even within that impulse phase, we're going to have corrective waves throughout. And so when we consider it in that way, I don't look at this as bearish as maybe many other analysts do, because I believe that this is all part and parcel of this market moving back to higher ground. It's going to do that not as a straight move up, but rather, as we've talked about on many occasions, as that stair step up, in which we have a series of 5 or so waves, 3 of them on the impulse side, here, here, and here. And then, of course, in between those are going to be some sort of corrective waves. And that is exactly what I think we're looking at right now. And lastly, before we touch on silver and conclude the show, one more chart for gold. This is a 2-day chart, Andrews Pitchfork, and I draw our attention to the fact that we are still absolutely above the downward channel line. You can see that right here. You can also see that it has not breached back into it. And so what we could see is the market move down, hit this line. If it bounces off of that, that really would confirm the fact that what we're looking at is simply the market in a normal corrective wave that is surrounded by impulse waves. In other words, impulse to the upside, corrective wave down, and followed by another impulse. Little too early to tell, but traders, that's my current take. So traders, I draw your attention to this daily chart. This is the cash market of silver. Silver currently under pressure, well below $21 per ounce. But here is what I find interesting. When we took a look at the longer term move in gold, we had determined that this recent move from about 1330 down to 1294, a $100 rally, we've given up on that $100 rally. We've given up a substantial portion of it, or about 50%. Now, take a look at this silver chart. Same thing. We're starting at June. And so the market goes from what? 1866 up to 2155. It's really got to go to 2045 before it even hits a 38% retracement. So what I mean to say by that is, on a technical basis, we could easily see further downside pressure in silver in terms of where it could logically go. We've got no real technical evidence of support in this area, just as we had no real technical evidence of resistance on the way up. I was looking for the market to go anywhere between $21.80 up to about $22. We stalled at $21.60. My sense is silver on a technical basis could have additional downside pressure as we look at this market. However, we have to see what the fundamentals bear and how that works out in the marketplace itself. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.